Good morning, everyone. Welcome. My name is Leah Bordelin, and I'm the director of the Haskayne Centers at the Haskayne School of Business. And I'm delighted to welcome you today for the second BMO Professorship in Sustainable and Transition Finance event. So we're very grateful that you're here today. It's a wonderfully full room, and we're excited that you're already having great conversations. Today, we will explore how to scale up clean tech firms, focusing on entrepreneurial ecosystem in Alberta, which has seen significant growth in recent years. With many promising startups emerging, our panelists will delve into the challenges Canada faces in scaling these firms and discuss strategies for improving our approach moving forward. We're joined today by John Redfern, Judy Fairburn, and our moderator, Dr. Yrjo Koskinen. And we're very grateful for you joining us today. The University of Calgary, and the Weston as well, is located in the heart of southern Alberta. Both acknowledges and pays tribute to the traditional territories of the peoples of Treaty 7, which include the Blackfoot Confederacy, comprised of the Siksika, the Piikani, and the Kainai First Nations, the Tsuut'ina First Nation, and the Stoney Nakoda, including Chiniki, Bearspaw, and Goodstoney First Nations. The City of Calgary is also home to the Métis Nation of Alberta, Districts 5 and 6. In 2021, a gift from BMO supported the University of Calgary to support a new professorship in energy transition and finance. Through the BMO Professorship and I are not getting along today. Professorship in Sustainable and Transition Finance at the Haskayne School of Business, Dr. Yrjo Koskinen is delving into practical applications for oil and gas companies, investors, policymakers, bankers, and investment managers as the global economy makes the transition to net zero carbon emissions. The professorship also supports Dr. Koskinen's academic research on how environmental issues and carbon emissions affect corporate valuations and financial practices. Thank you very much to BMO for your support and for recognizing how this collaboration between post-secondary institutions and the business community allows us to build learning environments for future leaders, advance innovation, and engage our community like we are today. After the panel discussion, there will be time for audience questions. So you think of those as we're going through the discussion. And I'd now like to invite our moderator, Dr. Yrjo Koskinen, BMO Professor for Sustainable and Transition Finance at the Haskayne School of Business, to introduce our panel members. Welcome, Yrjo.
Thank you so much, Leah. So before I introduce our panel members, since this is a lot of business people and business students and business faculty and engineering faculty, I have to quote Vladimir Ilyich Lenin. There are decades when nothing happens, and there are weeks with decades happen. This has been such an event. We are not delving too much on the market developments because of more long-term issues, but maybe perhaps in some of the audience questions we might entertain questions about what is the current situation means for scaling up clean tech firms. So we have two excellent panelists today. Judy Fairburn is a general manager at the 51 women-led venture funds. She's also a board director at Petronas Energy Canada, Virum Industrial Tech, and Vice Chair of Business Council Alberta. Her earlier career included Executive Vice President and Vice President positions in two energy companies. She also co-founded Eavor Innovations' inaugural 100 million Clean Tech Digital Fund, and led the consolidation and modernization of Alberta Innovates as board chair. Judy holds an chemical engineering degree from the University of Calgary, an MBA from the Ivy School of Business, Western University. She was named one of Canada's top 50 changemakers in 2023 and fellow of the Canadian Academy of Engineering. She has also been awarded the 2025 Cleantech 50 Lifetime Achievement Award for Sustainable Innovation. Welcome, Judy. And John Redfern is the president and CEO of, and co-founder of Eavor Technologies, a geothermal firm. John brings his expertise as an investor, advisor, and serial entrepreneur in data analytics, oil services, and energy tech verticals. He has held executive roles in multiple international oil companies and oil service companies, including as a director at Hess in London, president on AccuMap in Calgary, and president of IHS Energy in Denver. Prior to Eavor, John spent 13 years in China, co-founding a series of startups, the most recent of which is Local Gravity, a leading retail data analytics platform in China. He holds a degree in engineering physics from Queen's University, law degree from McGill University, an MBA degree from INSEAD and in finance and in France. And exactly where I also got my PhD, so welcome, John. So, Judy and John, if I may ask you to take your seats. Before we start, let me do a little poll. How many of you are from the energy industry? Let's just show of hands. Very bit. How many of you are from the finance industry? Quite a bit as well. How many of you are working in entrepreneurial cleantech firms? Oh my gosh. And how many are from University of Calgary? So we have a kind of 30-30-30 mix. Excellent. So let's get started with the questions. And we will have plenty of opportunities for audience questions as well. And there will be 2 microphones. So when you have a question, please speak to the microphone. So the first question is for John. And too bad I don't have my reading glasses here, so I have to improvise. So Alberta and Canada have a stellar reputation in clean tech startups. For example, in 2024, 13 Canadian firms were included in the Global Clean Tech 100, the second number of firms after the United States. 3 of the firms were from Alberta, of course, Eavor Technologies and Carbon Upcycling, which is also present here. However, we don't have the same reputation with scale-up firms. What has been your experience scaling up and growing Eavor? What have been the biggest roadblocks and what are the biggest surprises?
Well, I think what makes it an excellent spot is, first of all, the ecosystem here and all the service companies and everything else. If you're prototyping or trying to work up a new technology that has anything to do with the subsurface or oil and gas or energy in general, this is great. When we talk about more on the finance side, again, we found it a good place to start. Once, because back where we were starting, there wasn't a lot else going on. Back in the 2016, 2017, it was tough times in the oil industry and people were looking for different things. And we found, it's a ladder you go when it comes to scaling up finance-wise. When it came to angel investors, we found lots of those, including a guy named Doug Beach, who single-handedly put about 10 million into us. That's a big angel, but there was lots of other smaller angels as well. So that worked well. There was good government support, whether it's from STTC or NRCan or Alberta Innovates or Emissions Reduction Alberta. All 4 of those helped us on our pilot project near Rocky Mountain House. But then it gets a little more complicated when you start getting into more institutional money. Like when we came to VC money, we didn't get any VC money in Calgary. We did the rounds, but we were viewed as a little bit too off the beaten track. And so we ended up, you got to cast the net widely. We ended up going all the way to Singapore to get our VC money. And then the more surprising thing, given the cross section of this room, is where we completely struck out was on the strategic money, the oil companies, the people who had other reasons than just a pure investment to want to invest in us. And for that, we ended up going out to the BPs and the Chevrons and the OMVs of the world and utilities in Japan like Chubu, pretty well everywhere except here, which was a bit of a surprise. But now we're entering a further round where we're getting in more into infrastructure type money and Canada's a leader in that. We got huge funds, so I'm ever hopeful that the financing chain that we're climbing is going to bring us back here to Calgary. But we'll see.
So the interesting thing is for institutional strategy money, you have to go abroad.
Exactly.
Yeah. So Judy, as your experience in the energy industry, starting 2 venture capital funds, policy experts, what is your view on these issues? How are you getting better at scaling up, and especially on the financing side?
So John, huge kudos. I think Eavor is a great example of doing what it takes. Mm-hmm. And cleantech is hard. A lot of people call it hard tech because you're not just dealing with trying to get the capital. You got to deal with all the physical complexities of being able to scale it up and move it from a lab or small pilot or whatever to big scale commercial, integrated into facilities where the operators, and there's many of you in this room, need to run smoothly, and introducing something new presents a degree of risk. And I think from the finance perspective, I echo what John says in terms of we have a great city here for angels. There's a number in the room here, and early stage. Typically more comfortable though in software deals, because for what I said before, there's actually less complexity there. You can get to revenue sooner, versus it can be years and years and years until you're at revenue with clean tech in terms of physical facilities. And there's lots of complexities. And so I think what we have in Canada, and I think what led you to, and I've heard, we know this for a couple of companies that I've personally invested in as an angel, as well as with the 51, it has been Singapore and US money. That's typically been absolutely key when you're starting to move out of just the lab. We're pretty good in Canada, again, in funding in the lab to early pilots with the government entities that you mentioned. So it does take, and I think part of the problem is it'll get called the missing middle, the valley of death, crossing the chasm, all about finding the financing from, and some of you will know technology readiness levels in this room, from a point where you're going from pilot to first of a kind commercial demonstration. That's got a lot of risk to it, it's perceived risk rather, in moving to integrate in, and the huge amount of capital it takes. $2,500 million checks are kind of just entry there, if you look at how much money you've already raised. Right, so it is taking bold global players that have a longer term view, strategic companies like you mentioned, oil energy companies, and government funds to make it happen. And I think in Canada, Canada Growth Fund is also an important new entity in the last year, which I think is invested.
They saved our bacon.
Pardon me?
They saved our bacon.
Yeah. Exactly, because they've got that mandate to come in there at that.
We were basically the subject of a hostile takeover, and they came in and prevented that. What was interesting is that to get across that valley of death or whatever, it's a challenge in clean tech because clean tech is something that takes time. It's a sort of a existential threat, but it's a slow-moving one. Mm-hmm. What actually allowed us to sell our company or sell investment in our company wasn't green, the fact that it's green. It is green, and that's a nice check in the box. But the main thing that allowed us to raise money was fear. Fear of energy, not having energy independence in the wake of the Ukrainian situation. Yeah. So our business took off as soon as Putin invaded Ukraine. And then all of a sudden, everyone from Japan to Singapore to other European countries said, my God, what are we going to do? We can't be dependent on Russian gas. And now American gas may look just as dodgy, but they ended up not just for electricity production, but for heating. Everything is district heating in Europe, and the heating market's as big as the power market. So that was the huge boost for us. And then just as that was starting to plateau out, of course, we had AI, that revolution, and all the hyperscalers having huge demand for power now and willing to plan 5, 10, 15 years into the future and to sign PPAs along those lines. So it's interesting. We're clean tech, but the real drivers of people moving now and getting their checkbook out now, or governments giving incentives now, has all been security and independence.
And especially in Europe, if you think about your main facilities in Germany,
Yeah.
and for Germany used to be so dependent on Russian national gas, and now they have been pivoting away from that. So I mean, that makes complete sense that they are interested in geothermal over there.
Yeah, it's interesting. It was a whole trifecta, because they were either dependent on Russian gas, or they did a lot of the district heating with waste heat from nuclear plants or coal plants, which are also going away. And then you think, what other options do they have? Biomass, but it's not really green and not really that scalable to heat all of Europe. So we're the only game in town. And I know we're the only game in town because even nuclear's making a comeback. But
even in Germany now, so we'll see.
Yeah. So do you know if they're going to that as their alternative to you? That's a good market to be in.
So going forward, I mean, so you have had a lot of interest in Singapore, Austria, Germany. What can we do better here in Alberta and Canada to make sure that, let's say, companies like Eavor Technologies stay Canadian rather than become a European company?
I think we've already got the best of the best of a situation. People always focus on, show me the projects. The projects are irrelevant. The projects are a distraction. I mean, you got to do them, but Alberta's not going to get rich by, why don't I be controversial here? It's not going to get rich by installing solar panels made in China. You get rich by being the country that builds those solar panels. In the case of geothermal, North America is the expert when it comes to drilling wells, and that's the primary input into geothermal. So that's something that we can own the high ground on. So you ask, what can we do in Canada? We're not working on any projects, but all our R&D people are here. All the IP is being developed here. All the licensing fees are going to be coming down, and people will be using that technology to build projects in Japan, in Singapore, everywhere else. That's the way we want to be. That's what we have to do if we want to maintain the lifestyle we've grown accustomed to.
And if I can just build on that, just reflecting some of the prominent clean tech firms that have come out of Calgary, Eavor, Summit Nanotech, Carbon Upcycling, Arrington, which the 51's also invested in, and others. You look at where these people came from that had what it took to start a new company, and boy, it is hard being a founder. Like,
right.
I was a senior executive for years, working closely with founders and being a founder of the 51. It is tough. These are roles that really develop you. And where do these people come from? Each of them. They came from the oil and gas industry, and in particular, I'll point oil sands for each of those companies. And the other thing, Evoke Innovations, which was proud to co-found, funded by Cenovus and Suncor out of the gate. Again, there were motivations there to be able to co-found it. It's now one of Canada's preeminent clean tech funds, and moving as well to get at this valley of death in terms of where they're helping fund. So I think we should be really proud in Calgary that we get after it when there's opportunity that very mission driven, do what it takes, having the passion. Those companies have come out of this room and rooms like this.
So we have plenty of expertise and technical business expertise, but the bottleneck is strategic financing and patient capital.
That's right.
What can we do better in that respect? How can we get more patient, strategic investors investing in capital intensive projects?
Meetings like this today, get the word out. It's all up to you. But I mean, it's hard to make it happen. The sort of whole risk appetite has to be there, and it only develops over time as people do more projects. The few companies you talked about will lead to a few more companies. And it's important that we focus on things that we know we can do better than anyone else in the world. There's no point in me starting something that has no roots in Calgary, because it's not going to get anywhere internationally.
So you have to have, of course, competitive advantage over other jurisdictions.
You got to take the foundation you have and build on that, and that makes the difference. And what I found, I think, in Calgary, we haven't had that mix. There's probably a bunch of people who say, I'm a green entrepreneur, and then there's a bunch of people who say, I'm an oil and gas person. But we really got to mix the two, which is where you see the success.
Exactly, and energy is energy, whether it's molecules or electrons, right?
Mm-hmm.
So if I just build on that further, and this concept of the missing middle, value of depth, whatever, I think if we look at the worlds of finance, and there's lots of experts in this room, venture capital takes you to a point, and I'll throw a few things out there, maybe to a Series B or so, and when you've hit some big milestones, you've perhaps got a pilot that you've demonstrated. But then there's a big gap to where the world of private equity project financing goes, because they don't want to take the technology risk. And so you got that big gap in the middle. And I think what's important here is, I mentioned, the Canada Growth Fund has been there to help fill in that gap. It's a subset mandate from the federal government for PSP investments, I meant to say. So our pension funds in this country are amongst some of the biggest trillion-dollar investors in the world, and a huge investments in infrastructure. And so as we see our own at-home pension funds being able to have somewhat of their mandate to fill that gap, I think that can make a difference as well. Alberta government, I think, has got some bold plans as well. They've been a key player here. But we need to have governments as well as strategics be willing to fill that gap, to get to the first of a kind commercial. That's the stage we're talking about here, which is the nirvana.
And especially we should have more pension funds investing in these long-term projects.
Yeah, before the pension fund, so there's that gap to strategic investors that you have to get up to that next step.
So meaning existing energy companies.
Exactly, who can take the technology and use it themselves. They have more reason to invest than just the return on the venture investment. And that's been crucial for us. What's challenging about that is they're the most challenging financiers because they do have ulterior motives. And so you've got to sort of ride this dragon that you never know whether they want to crush you and buy you cheap or whether they want you to succeed. And I don't think they even know themselves, because one day they'll go, that looks pretty tasty, let's squeeze them a bit. And and it's true. I never really thought it worked that way until I was on the receiving end of it, and you can see it's their own self-interest, which is what they're supposed to do. And we can do things like try to keep the ownership fragmented and not let them get control. But once they do, then the problem is if that's not a Canadian company that's absorbing us, but some foreign company, all that expertise goes away. But everything else is pretty logical. All the R&D happens here because the expertise is here, and there's nowhere cheaper on the planet to drill a well than in Alberta. So our going forward, our R&D or our demonstration projects will always be here. But when it comes to going down the learning curve and proving a new technology, you really got to focus on the low-hanging fruit, because the first projects are never going to be economic. And that's why we ended up over in Europe, because we take the technology you developed here, but we sell it for, on the power side, 251 euros per megawatt hour. You're not going to get that in Alberta. And the same thing with the heat, which is even more, it's commercially negotiated, but it's even more lucrative.
So one thing that, I don't have any scientific proof, so this is kind of, my wife and I, we've been living in Calgary 10 years, almost 10 years now, after living 12 years in the US and before that in Europe. To us, it strikes us that Canadian businesses are very conservative. Maybe Albertans like to disagree, hey, we are the risk-taking province. So to me, this looks that companies are very risk-averse, have very conservative business attitudes, and that kind of explains the lack of strategic investors. Well, is there any truth to that? Or is this
I don't know. That's a little harsh. There's probably an element of that. But I would say a more positive way of putting it is that the oil service sector and the oil sector is so incredibly competitive because it's fragmented, because there's a diversity of players, there's thousands of service companies, that makes everyone focus on their little part of it, and it's hard to take a broad strategic view like you could if you were a Shell or something and say, this is going to be a whole new thing. So I think it's the competitiveness of it, and it's great if you're drilling a well or wanting to use existing technology. This is super efficient. It's just not the same culture that's going to say, let's take a big strategic bet.
Yeah. And I might augment that. When people can see growth opportunity, they will take more risk and they will finance it. So as we saw in the energy sector here in the heydays of oil sands, there was an awful lot of technology and capital risk that was taken to unlock the resource. Mm-hmm. And so I'd say, in terms of Canada, let's see what's going to continue to change in this environment now, and we need to develop all forms of energy. But if there's a growth mindset, more risk will be taken. But we've had a lot of things hamstringing this city, right. And I think that does create some conservatism in the shorter-term quarterly outlooks. I think the other thing that I would just augment on the conversation of strategics is no longer are you just looking at strategics being, of course, corporations that we're talking about that can think strategically versus only worrying about short-term returns, so they will invest in longer-term clean tech. The world of tech is a very important factor here, and as many of you know, the energy demands of artificial intelligence are huge. Yeah. Maybe the Chinese are starting to crack that a bit. But so we're starting to see the Microsofts out there, as many of you have heard, saying, "Hey, maybe we'll reactivate some nuclear plants because we need some cleaner power." We're starting to see hydrogen maybe having some more challenges, green hydrogen, because they're competing against data centers for clean power. So I think you have to look at who has the need, to what John said, in terms of where your clients have been for forever. It's not usually the traditional
You're right.
players.
It's a cost-benefit thing as to where you invest, but it's also scale, the size of the prize. Yeah. If the prize is big enough,
people are willing to take risk then. Huh?
Yeah, exactly.
So I think there's so much expertise in this room. So let's now switch to audience questions. So there is 2 mics here. So who wants to ask a first question?
Good morning. My name is Catalina, and I am from the Haskayne School of Business. Thank you so much for being here with us. I think I speak for everybody. We appreciate your insights and your expertise. My question is related to, you mentioned how growth is related to lowering the risks for investors to come here, right? So my question is, how can we, in your opinion, what are some ways that we can signal less risks for investors, maybe from a regulatory side or from the industry side?
So how can we de-risk projects? Who wants to start?
How can you de-risk? Well, part of it is the sort of financial terms you come up with. If you have something that's a convertible promissory note or something like that, that investor is protected on the downside, it turns into debt, but there's still upside equity if you can deliver. How else do you de-risk things? You de-risk things by using some of the many government programs that are out there. We mentioned the 4 in Canada, but for example, our real break came when we got a European Union Innovation Fund grant for 91 million euros, and that's not easy to get. But you got to apply to you got to turn over every stone, and the government programs are there, but you can't give up. We had to apply twice. Got rejected twice, and then someone dropped out, and we got in. 2.5 years later. So you just got to be persistent, and by using that grant money, any grant money you have, of course, makes the commercial equity coming alongside feel so much more secure, and because money doesn't like to be lonely. It likes to be in there with lots of other investors, lots of everything else. So paradoxically, for example, one of the reasons geothermal is doing so well right now is because there's a bunch of companies getting involved in it at the same time. we always complain about our rivals and people who are doing something similar, but without them, we wouldn't have been able to raise as much money as we could either. People want to see an industry to invest in, not an individual company or an individual idea. Because they always are skeptical about that. Why isn't someone else doing it?
Yeah,
And if you say, well, they are actually.
Judy,
So-
what's your view?
Yeah, just augmenting there and excellent perspectives. I think growth doesn't necessarily de-risk, but it provides a large enough prize to go after it. And and I can think just back in some of my background with Shell in the 90s to 2000s. We took on a major innovation that was going to save $1 billion in capital. And an oil sands project then, that was a lot because those projects could be built for 6 or 7 versus now. And so willing to take on, because there was a big business driver, a brand new process from the bench and scale it all up to commercial. And we did that in 7 years because there was a huge prize of unlocking a major resource. And governments were cooperative, regulatory was cooperative, grant money was cooperative, and of course the corporations involved saw the big prize and they put the resources around this. So when you get enough of a driver from all places, you can work through the risks. And I think cleantech and scaling it up, talking today, is all about de-risking. Every stage in the game. Your beginning stage coming out of the lab, what are the key variables that will make sure you've got a huge advantage with this new innovation? You get into your first pilot, how do you prove that it actually works in a real world environment with all the different things that move around, and prove out the economics, start to prove out the economics of it, and how you start to engineer for the future. Get into first of a kind commercial demo. Okay, how is it actually going to integrate into your operation and prove it? Every stage is about de-risking. So to your question there, you have to be really strong, and I know John's team has been that, to figure out what do we have to de-risk now, how do we focus and triage on that, how do we plan enough so we can manage the known unknowns, because you're going to get lots of other things thrown at you.
Yeah. The interesting follow-on to that is our first project was actually not a power plant. It was basically a series of steps. We went to all our potential investors and we asked them, we say, of our plan, what are the elements that you're most worried about? And they'd say, oh, it's intersecting the wells, or does the rock pipe work, or does the thermodynamics really work the way you say? And so we designed something specifically around answering those questions. What we didn't do was get a power plant on the back that we could have bought easily and converted the heat into power, because that's off the shelf. No one needs that proven. And that worked quite effectively for us. I mean, now we're at the stage where you need a full functioning commercial scale one. But that first one, it doesn't have to be a product. It can just be a series or an integrated set of experiments almost that prove the technology.
Yeah, prove the concept and technology,
Yeah.
yes. Are there any other, Art, please, yeah.
Yes,
Here
it's
comes the
Art
tough
here.
one.
Good morning. Thanks, Judy, John, Yrjo. When we think of clean tech from an investor perspective, one of the big issues is, does it stand on its own? Is it competitive in a global marketplace, or do you need government subsidies? John, you referenced this 90 million euro grant. I think you referenced €251 per megawatt. I assume the buyers of that output are probably being subsidized. So as an investor in clean tech, the challenge I find is always, how much do we need support from different policies and different governments, and how certain is that support, and it ebbs and flows. So maybe you could just comment on just how critical it is. I don't know if it's half of the economic model or 10% or 80%, but I think we'd be interested in those kinds of thoughts and comments.
There's good pump priming and there's bad pump priming. An example of bad pump priming that a lot of geothermal players always ask for is they say, oh, if only the government would pay for our exploration wells, then we'll be okay. But all that is doing is gambling with public money. If it comes in, you go, great. If not, whoops, it's on the, So they always ask for that. I always say, I don't want to even hear about that. But there's other investment, pump priming, a lot of the stuff that the Loan Program Office, Jigger Shaw, does down in the States, that are there specifically. They will only lend to a project if it's going to unlock a whole new industry. And if you go, they have a series of liftoff reports for geothermal, for nuclear, all the different energy types. And they're looking for a particular type of project. But it's got to be a project that within a couple of iterations makes it commercial. If there's no roadmap to commerciality that you're unlocking, the government shouldn't be involved. They're just wasting money.
Judy, what's your view?
I think government money is important at the very early stage on the science, and to unlock different ideas and secure the IP. Then I absolutely agree with John. It has to be partnered with business players and business money, so you know it's on a path to commerciality, and that you know that there's customers that are interested.
And also government should make a good return as well, and it's not a grant or gift, right?
No.
Are there any questions over there? Yes?
Hi, I'm Rebecca Van Hoove. I work for Canon Energy, and it's very interesting so far. My question is, what are the biggest challenges you've seen when it comes to the internal operations of a startup as it scales up? So by this I mean manufacturing, hiring, organizational structure, all that internal company operations type stuff.
Go ahead, John, and yours, and then I'll talk about the many founders we work with. So.
Basically, after we raised our first couple $100 million, I said, now all we have to do is build it. Never have more false words been said. But whatever the immediate challenge is, you can always say, if I just had the money, it'd be okay. The fact is, a startup, like ours, a few guys in a room thinking up ideas in Calgary, and then we got to translate that into the most audacious drilling project that's going to take 6 years and have 260 kilometers of wellbore in it and 48 intersections and 96 well segments in a country, Germany, that doesn't have the same support network. Mm-hmm. It's a different language, different regulations. We're a bunch of Canadians. We don't, know what we're doing. It's amazing we survived it all. But it requires a whole different attitude, a whole different skill set. And we tried to accommodate that by basically keeping the Calgary office as the R&D and setting up a whole new office in Dusseldorf that was filled just with operational people who would push back and stick to the plan and what it was. Because otherwise, the R&D guys have a new idea every week and say, yeah, but this one's better. We got to change all the plans again. And so it is hard to switch the psychology of that.
And I'll come at from the perspective of 51. We have 3 venture funds, about 40 companies in our portfolio, with the newest fund being food and ag tech, including companies in recycling, biomaterials, and other worlds that overlap with climate tech. And I think companies go through different stages. Throughout, you always need founders that are just so agile and just drive no matter what and can get through all the tough challenges. I heard this 25 years ago, and it's still true today, that as investors, invest in a team that is an A team that gets through whatever they have to deal with and pivots versus an A technology. If you have to choose, it's better to have an A team with a B technology than an absolute rock star technology and a B team. And that has proven to be true
the technology is always going to change anyway.
It's always going to change.
And what always amazed me, every startup I do, if I go back 3 years to see the original slide decks, it's terrible. At first I'd say, why aren't people seeing how brilliant an idea this is? But the markets are right. It takes a while to mature.
And the team will evolve, and recognizing, what you need at that next stage for scale up. I think the other thing too is you can look at someone, you think you need them, they have this wonderful CV, maybe they've been in a big company that you think you want to attract, but if they don't have the DNA of being in a startup world, it's not going to work. Because you got to roll up your sleeves. You're so resource constrained. And you really need to be that right kind of person to handle a startup environment.
Yeah, you need to clean up toilets if needed, right?
Yeah.
So John, so if you have an office in Calgary and office in Düsseldorf, so you're a bunch of Canadians and a bunch of Germans, how do you manage these completely two different cultures?
Well, we were talking about that a little bit earlier. It's interesting when you're hiring in Germany for drilling people. In fact, it's not a totally German office. I think we had like 14 different nationalities out of the 30 or 40 people we had there. So it's international everywhere. Calgary, it's mainly Calgary people. We've hired them all here, a lot from Synovus, so hopefully that'll keep happening. And some good, we have some good recruitments every year from there. But how do we manage it? By having other people who are international people join the company. And the other thing that's difficult is that you also have to not just hire the right people, but you also have to get rid of the right people too. And so often in a startup, you're so growth oriented, you keep adding people, you don't really seriously look and say, wait, I can get 10 times the leverage out of getting rid of that guy than I can by hiring 3 new people. And we've had to go through that as well. Yeah, it's never, not every hire is a winner. It's
Of course, yeah. Are they?
Hi, my name is Roberto. I'm an MBA student at Haskayne. Question for the both of you, I guess you from the 51 and you from Eavor. What are the biggest challenges that you're facing at the moment?
I think the biggest challenge I'm worried about facing at the moment is every pre-revenue entrepreneur's startup nightmare, that the macro environment turns against you. I've had startups in 2001, 2008. I thought COVID could be another inflection point, but it wasn't. We sailed right through it, and now we have chaos central down in the US. And if markets freeze up, like they did in 2008, where all my banking friends were chopping their money up into bite-sized pieces and depositing into separate banks, you're not going to raise money in that environment. Doesn't matter who you are. In those sort of situations, you can't even give away money because everyone is frozen. And if you don't have any revenue, if you have no way to pare back the costs to survival mode, you're dead. So always, that's my biggest worry. That's why, every entrepreneur I'm sure never feels like if only I had gone slower. No, you got to go fast as possible while the window is open. If you had asked me that question a couple of weeks ago, I'd say my biggest challenge was the one I alluded to before. Now all we got to do is build it. Because then you realize, when you're doing first of a kind, there's all sorts of things that crop up. You had no idea were going to be a problem. And you've got to be able to engineer around those or find workarounds. And it's painful because I think of mega, first of a kind mega projects, less than 10% of them end up on time, on budget. And so you're going to have a lot of anxious investors and board members and everything else, and you have to be able to keep them with you and believing in you. And you need their patience if you're going to get anywhere.
So now it's more macro rather than implementation. What about you, Judy?
So I'll speak with an investor's hat on, and I had the chance ahead of this morning to speak with the managing partner for BDC's Climate Fund, Sherry Corbett, Evoke Innovations, Erin Madrow here, and
she's one of our patient investors.
And then Clean Growth Fund, Christina Lopez, managing partner. And echoing that with our own experience, is that one of the biggest worries right now is companies that you see that have high potential and have already come a long ways. Those investors I mentioned have written so many bridge checks, like convertible notes, whatever, like they are trying to do everything they can to support their current companies. and they would have been saving these dollars for maybe the next round of scale, but those next lead investors are just not coming forward because they're saying, oh, it's just too much change in the world, I'm going to wait. And that's one of the biggest worries right now, is that you get companies to quite a stage and then, like you say, they run out of money. They can't wait any longer. No, I'm not inferring that's Ever's issue, but there's a lot of really good companies out there that are facing that.
And it doesn't necessarily mean that Ever itself stops, but let's say there's a change in ownership. Yeah. Probably at a very reduced price.
And it's bad for founders.
Yeah, it's bad for anyone holding a common equity.
Or earlier investors.
Yeah, earlier is especially.
Exactly. So you risk getting really diluted.
Yeah.
They don't own as much because the valuations come way down the term, and newer investors get way more rights.
I should say one of the better pieces of advice I got at the start of Ever is I was visiting one of my banker friends back in Toronto when we first did our first round to raise money, and he said, I can't remember what the percentage was, but he said we sold 20% of the company or something like that for X dollars. He said, you can't do that. You're not going to have enough room to actually get diluted down later. So he made us give the money back and ask for way more for the same percentage. And we still got diluted down, but not as bad as we would have been.
Yeah.
And people also always forget that those later investors always want preferred shares. They all want to have liquidation and preferences.
Yeah.
And that means that by the time the waterfall goes down to the common shareholders, you better hope that you've hit a home run, because if not,
otherwise there's no money for you.
all the cream goes to the big boys who came in later.
So we have room for one more question, and then we have to wrap up.
Hi, good morning. Ian with KPMG. Just a question, what are you seeing and hearing for pressures for startups and scale-ups to move their companies and IP outside of Canada? How do we protect against that? And what are your suggestions to keep reinvestment dollars in Canada?
That's a good question to end.
Yeah, I mean, there is pressure. If I look at our portfolio, some of the companies have set up shop in the States, even preemptively ahead of tariffs. And for a couple different reasons. One, because, and this is more in the software world, first customers were just moving faster down there. So I think, domiciling, there's pressure certainly to do that. But I think it also just marries with where is the money, where are the first customers? And so if it comes back to Canada, continuing to be bolder here, I'm going to hope that there's a silver lining to all this chaos, where we deal with our interprovincial trade barriers, we become bolder again to buy Canadian, so that there's enough pull for companies to find their first customers and their financing at the next stage here.
And the other thing I would add is things like Canada Growth Fund, it's a quid pro quo that the IP stays in Canada.
Yeah.
So, exactly. And the head office and all that.
So that has been a good initiative for the federal government.
Yeah.
Yes,
yeah.
Absolutely.
Well, I think it's time to wrap up. Thank you so much, Judy and John. Been an excellent panelist. Thank you for your activity, audience. This has been fantastic. Thanks, everybody.
Yes, thank you very much. That was really interesting. I can see everyone nodding and quite involved in listening to the conversation, and thank you for the great questions. Very quickly, I would just like to again thank BMO for their generous gift towards the BMO Professorship in Sustainable and Transition Finance. And thank you for joining us today. We really appreciate you being here. I'd like to thank the Haskayne team that always helps us put on incredible events. So congratulations to our team. Thank you very much. And thank you, of course, to the Westin for catering and for Encore AV staff, and to our Haskayne student volunteers who always show up and help us out, even though it's very early in the morning.